How's it going, guys? It's Ralph here from Beyond the Huddle. Welcome to this week's Bitcoin forecast. As always, we're going to take a look at the Commitment of Traders report. That's the COT for short, where we're going to take a look at the asset managers and how their positions changed for this past week. And then we're going to take a look at the price action. I'm going to keep it very simple today, just get straight to the point and see, what in the world is going on with this market, because today has been a crazy day. If you guys don't know, the Walmart news sent the Litecoin prices up 30% in like 2 5-minute candles. And then Bitcoin also went up, and then the news, everyone found out it was fake, and now we're straight back below some important levels here. So we're going to take a look at the price chart. And again, we're first going to start off with the COT to see what's up. So let's get to it. Okay, guys, so getting started here with the institutional positions, the COT on Bitcoin. Again, this is data as of Friday, and let's not forget that the data comes in on a Tuesday to Tuesday basis. So we're not actually seeing the data that happened on Wednesday, Thursday, or Friday. CME contracts only trade during the weekdays, so anything on the weekend price action doesn't really count. So the last day is that Tuesday drop. Okay. So getting started, if you guys remember last week, we spoke about there was 4 different scenarios, 4 different mental models that I had could potentially happen. And I actually wrote this on the 14th, so almost 2 weeks ago. And I had these 4 different scenarios. And the one that looks like it's happening, there's 2 of them that could potentially happen at the moment. And that's, number 1, if short stays strong and longs decline, it's a sell at this range, which at the time it was around 52,000, somewhere around there. And that's the premium between 54K to between 54K all the way to something around 47K. And that's from where we saw this aggressive move lower happen of about 18 to 20%. And that would be a move that I wanted us to bring us to 36, 38K. But we'll go over in price later what levels I'm looking at. And then I said if the shorts stay strong, then there's going to be a potential for sub 29K, right? So remember, if they're willing to keep long shorts open after the drop, that means they still have some interest in the markets to keep dropping, right? Last September when the markets went insane, they nearly decreased their positions to 0. So then that brings us to number 3, which was if longs go up, I'm sorry, not number 3, then number 4. So if shorts go down and longs go down, then I expect to move lower from this premium back to 36 to 38K. Well, we already know that even though the longs did go down, the shorts actually increased. So you can see right here, well, actually, I didn't talk about it, so we don't know that. But you can see right here that as of September 7th, the shorts increased by 8 contracts, which is not anything at all, or it's not anything large, but you know what? They sustained, and that's what matters. But the longs had a massive drop in their positions. It went down to 81 contracts. That's huge. So again, those are my scenarios. That's what I'm looking for. We're essentially looking to retest some support levels, and depending how the data comes in this Friday, that will let us know sort of like how we should keep expecting price action to develop. Remember, guys, price action confirms these ideas, and because this is delayed, the price action signal of a buy or a sell might come first. Okay. And let's go take a look at the chart then to see sort of what's going on here. So we go to the weekly. You can see that the percentage, right? So remember, there's a net position. That net position naturally should be declining, and that's exactly what we're seeing. So the question would be, is this net position going to go back below 60? You can treat it sort of like a stochastic. So we have the 80% extreme, and you have the 60% extreme. So you'd want it to, if you're expecting short prices, prices to go lower, then you'd want to see it go back below. So the idea, and I want to stress this more now because I didn't do a very good job. Again, I get the concept because I'm teaching it to you guys, and I've been using it and studying it and stuff, but maybe my delivery is not as clear as it could be. As long as you're net long, you're expecting 2 different things, guys. So if you're net long in the position, but shorts are high, then that means you have more longs than shorts, but I'm not expecting the market to trend because there's a reason they're keeping those shorts high, right? So that was my understanding at the moment. Right here, you could see that the moment, so if I get rid of this, so we're going to come here, we're going to get rid of this, we're going to get rid of this, and we're going to get rid of this. And now look at what happened here, right? So you can see that they switched net long as soon as this weekly candle closed, right? So then now I would have known, and I knew that I had to be, again, there's two answers when they turn net long. You're either going to be a short-term bullish buyer, right? You're going to be a short-term buyer, retracing into some sort of a range or something, and that's exactly what happened here. Or you're going to be a long-term buyer, so you're going to swing trade or position trade it. Now, what tells you if you're going to position trade it or not, that comes down to the short position. So back in September, so if we click on A again so you can see them all, back in September, the key that made you believe that you were going to be a position trader, which means you're buying and holding for crazy percentages, that's because shorts decline. Okay, so you have more longs than shorts in a percentage basis, and the shorts are declining. In this specific case, you had more longs than shorts, but the shorts were increasing. You see the difference there? And that's a very important distinction that we need to start making, because that would tell us, oh, I should expect a retracement, or oh, I should expect a strong trending market. Now look at what happened here back in January. So in January, what happened was the net position was declining. So the only way that can decline is if shorts increase and longs decrease. But you don't expect the high, right? You don't expect the high until that net position changes to more shorts than longs. Okay, that's the key right there. So that happened right here in February. Now it did do that, and you can see right here you finally had more shorts, and then it kind of messed around. It didn't really increase. It went back below here, stayed around it, and then as soon as April hit, that was basically as soon as the high was formed right there, you could see that the shorts increased, and that's exactly what you wanted to see. So now the shorts were above the 60 line. So that means they were in full control, right? In that moment in time, you had more shorts opened than what they had longs. What that told you was prices were going to drop. And that's exactly what we're seeing right now, right? We essentially are buying while watching out for a downside because their shorts are too high. And the only way we're going to say, okay, this is an actual bearish market is if and only if we go back to net short. Until we go back to net short, we know that they still have, because they have more longs and shorts, they have a reason to only be expecting a retracement. So I don't know if that was too wordy or too long, but that's exactly what I want you guys to start thinking. It matters both their percentage position, what they have more of, and whether their shorts are high or not. Okay, so again, in this specific case, we're net long, but the shorts are also high. So even though we're bullish, long-term bull, or well, we're not long-term bullish anymore, and I'll go over that in a minute. But even though we were bullish, we were expecting a retracement in price. So guys, don't worry if you didn't really understand what I just said there. I'm going to be going over this every single week. I'm going to make sure I stress this point on really understanding how the longs and the shorts are positioned in comparison to your net position, the percentage, okay? Because it's one of those things that once you get it, it's the coolest thing ever, because then the market sort of becomes more demystified. Now, I'm not saying you can't lose trades, and I'm not saying you're going to get the bias right all the time, because the COT is delayed. Sometimes it just so happens to call the exact high, but usually it takes about a week or sometimes a couple weeks to really get through to it. So really, you have to get really good at the price action and understanding what bullish or bearish signals you're looking for in confluence with the COT. But you guys have been seeing me do this for about 2.5 months, almost 3 months now, and it hasn't been going too bad. So hopefully we can keep correctly trying to time this market. Remember, we were bearish and we were able to get out of the market for this down move, and we didn't get bullish. Again, the net position switched back bullish here, but we were just waiting ourselves personally for the monthly candle to close. So as soon as August came through, then that's when we bought. And again, we got shaken out around 47K Ethereum and Bitcoin, somewhere around there, around these weeks here. And now we saw this weekly supply. So if we get into the price action part now, there was the weekly supply. So right here, from the open to the close, that's the equilibrium of that candle. And you guys can find that information in our free mastery course on our website. Again, totally free. You can learn exactly what supply and demand zones are, premiums and discounts, and anything else you might need. And you can see it hit it almost to the tick right here. This daily candle closed just below it, and then when the next daily candle opened, carnage, absolute destruction. And again, the shorts were high, even though you're net long, right? Even though right here you had turned net long, the longs had finally gone above 60%. That's the threshold that we look for. The shorts started increasing, and I told you a big red neon sign, be careful, watch out, because when you hit the premium, it's not going to be pretty. I was trading altcoins, so it didn't look that pretty in my altcoins. I got out maybe like a little bit lower. That's where my stop losses were. So I didn't get caught up in this move, but what I said in the video last week was that the key defining level that would have put us short-term bearish was going back below this green line. Okay, so on Bitcoin, let's go on a 4-hour. Last week we just destroyed that level, and that made us short-term bearish for the entire week. Now we're going to delete that one because that is no longer a level we care about. That was for last week. We have new levels this week. I am also going to delete this purple zone, even though it's a long-term support level or resistance, depending if you're above or below it. We're going to just focus on this one, and then we'll focus on this weekly level. Okay, so here we have the monthly level. That's what I call long-term. And here I have a weekly level. That's what I call short-term, right? So these change weekly, these change monthlies. So that means to me, as long as I can stay below this green zone, I'm going to be using it as resistance for this week. As long as I can stay below this purple zone, I'll be using it as resistance for this month. So today when the news hit, look what happened. It's not surprising. We went straight to the weekly resistance zone, and then we went straight back down. So 6% up, 6% down. And what does that also happen to be? That's your daily open, your weekly open. So there's definitely a lot of confluences there that would have made you think, oh man, this thing's probably not going to break it in the first try or something. Now, had it broke it, then yeah, we would be thinking that this is probably a pre-bullish, and that's how we work, right? So I'm not trying to predict the market here. The only thing I'm trying to do is gauge the sentiment of, in my anticipatory stage of the COT, maybe margin positions, on-chain data or something, and then do some very basic TA on the charts, some premiums and discounts, supply and demands. It's stuff that anyone can do, right? And then just see how they react at these price levels. So you can see right here, you had your swing high, swing low, and they came right back to that premium. So that's another thing you guys can look at. Again, if you don't know how to do it, take a look at our mastery course. So great. We're short-term bearish. We're long-term bearish. Okay. Now remember, that's based on price action that we are long-term bearish and short-term bearish. Based on the COT, that tells us that that long-term bearishness is could potentially give us that retracement to around the 36K to 38K. Now, before we can get to those price levels, and we would expect some sort of a bounce here until we switch net short. Now, when we do switch net short, now remember, to switch net short, it's not that the blue goes below the 60, is that it's not that the blue goes below the 60, it's that the yellow goes above the 60, okay? So that's what we need here. We need the yellow going above the 60, so the blue can go below and then go back above and then be fine, right? And then you can see it better this way. So this is the net position, not percentage based. And this is the net position percentage base. So basically, whenever this purple line goes below the zero line, that's when the net position is finally, negative. And that's what happened here. It hit it here in February. It finally went below it late February, mid-February. And then it stayed below it. It tried to challenge it again in April and then just absolutely got destroyed. But you can see that in percentage base, it only really went above it once here. It matched it there, so it didn't go above it. And then at the actual high. So that's something to keep in mind as well. So yeah, right now we're just gonna play the retracement game for it to be a potential buy, right? So in that case, we're gonna draw our fibs, and now we're gonna see some sort of confluence between a demand zone. As you can see right here, we're gonna combine those two candles. That's your demand zone and your discount zone. So if you guys don't want to use the demand, you can just do a little cheat code there and now you have a larger area if you don't want to be that precise, which it doesn't really matter for me because I use larger stop losses. And what do we have here? We also have the quarterly open. Now, something Misha talked about when he did the video when I wasn't able to a few weeks back, there was the $40,000 level right here. So $40,000, that is another discount right here. So we definitely want to watch out for that. Now, do I think it's going to stop there? I'm going to be honest with you, no. But, you know, I've seen crazy things happen in this market. So who knows? So here we have, that's your discount right here. So that would be our nearest target at the moment. So you can see we almost hit it during this 18% drop. And now we're looking for that next drop, and it'll either, it will either, you know, drop into it and bounce like this here, or it will drop into it and just get crushed into this 36 to 38K area. Now remember, as we hit these areas on Fridays, we want to then be looking, okay, so let's assume it falls to this 36 to 38K zone, right? So, well, it's fine. It's actually not 36. So if we make it larger for the discount, then you can see right here, guys, the zone becomes 36.6 to basically 33K. Okay, so that's just to be a bit more precise. So if it falls between that 36.6 to 33K zone, the discount of this entire range, we look at on the Friday data, okay, did the shorts, did they decrease? Did the longs increase? If that happens, then I can expect this to be support. If the longs keep declining and shorts either stay the same or they increase, then I can expect that scenario number one, right? Scenario number one, which is what? I can expect prices going sub 29K, right? That's if shorts stay strong and longs decline. Very, very important stuff. Again, if this goes way over your head, don't worry about it. It's a lot of wording that I'm using right now, but we will definitely be going in, you know, talking about this every single week because that's what I do. I enjoy talking about the COT and seeing kind of how that's going to develop price. So there you have it, guys. That is your breakdown for today. I know it was a little more technical on the technical side because I had to talk about the percentage breakdown of the net position and kind of how the individual positions tie in with that. But, you know, it is what it is. You guys are here for the good content and the information. So I have, you know, hopefully you guys enjoy it and you find some value in this. So with that being said, if you did find some value in it, make sure to share it with some friends and family. Make sure to let me know what you did like about the video. Maybe it's something I can improve. And I'll see you guys next week. Misha will be doing the video tomorrow for the altcoins. And then I'll see you guys on Saturday for the update on the positions of what the COT did. So with that being said, talk to you guys later. Peace.